If there's anything that you guys are not able to understand, just please let me know. Symmetrical triangle. Okay. See, yesterday when we were discussing about trend lines, I told you that we can use trend lines to draw the channels as well as symmetrical triangle and wedges. Now, this is no, I will not say that this is a perfect triangle, but see, yesterday there was this triangle kind of a formation in Dr. Reddy's, and in fact, today also the prices opened just near the resistance of this trend line, and then we saw a breakdown. Though I think there was some negative news in the Dr. Reddy's, that's why we saw this massive gap downfall and then a recovery in the stock. Symmetrical triangle like I showed you in Sun Pharma as well. See, on this day, if you connect this high, if you use a trend line, actually there's some problem with my mouse. Not able to draw it properly because my mouse is not working properly today. See what does it signify, and what you need to conclude is that when see the prices are now trading in a narrow range. So when prices are trading in a narrow range, there comes a point when the prices will give a breakout. Now, whichever side the prices give breakout, that side we need to trade. Like we just saw in Dr. Reddy's. It's just like a spring. You press the spring, and when you leave the spring, the way it jumps, that is the similar effect that you will get in this triangle kind of a formation. Prices are continuously trading in a narrow range. When there comes a point where the triangle meets the top of a triangle, when the prices are squeezed so much, then the prices gives a breakout. That is the time we enter in a trade. We can draw triangles with the use of trend line. Similarly, we can draw a channel to see if a stock is trading in a channel where it is taking a resistance and where it is taking a support. So whenever you see a triangle kind of a formation, then you have to wait for a breakout. So if you connect this, if you draw a trend line through this point, connecting this high with this high, and you extend your trend line. Similarly, from this low, you connect this low, then a triangle kind of a pattern will be formed. And see, it actually gave a breakout, and you can see a movement in the price. The triangle actually, which I showed you yesterday, it gave a breakout, and you can see the movement in the price. Okay, Imtiaz, got it? Anything else anybody wants to ask, or should we begin with today's session? Fine, then let's begin with today's session. Today we'll see the type of indicators that are most commonly used in technical analysis, like moving averages, RSI, MACD, stochastic. Now, a moving average is a widely used indicator in technical analysis. It is a trend following a lagging indicator because it is based on past price. Now, the two most commonly used moving averages are the simple moving averages and the exponential moving averages. That is, the SMA and the EMA are the two kind of moving averages that are most commonly used in technical analysis. Now, with the use of these moving averages, we can identify the direction of the trend and determine the support and resistance levels. And these moving averages also gives us the buy and the sell signal. Now, when a short-term moving average crosses above the longer-term moving average, then the buy signal is generated. And similarly, when a short-term moving average crosses below the long-term moving average, a sell signal is generated. Now, having said this, see, many people use different numbers of moving averages and different combination of moving averages. Like some people use three moving averages, some people may use two moving averages, and 50 and 200 are the most widely used moving averages. Now, as far as the shorter term moving averages are concerned, some people may use 10 period moving average, some may use 20 period moving average, and some may also use 100 period moving average along with 50 and 200. Now, simple moving average means that if I want to take out, if I take the average of last past 10 days, if I take the closing price of last 10 days and divide it by 10, then I'll get a simple moving average. In simple moving average, more weightage is given to the past price, whereas in exponential moving average, more weightage is given to the recent price. Now let's say if I go to indicators and I select moving average. See, first we'll see only one moving average, and I'll apply 200 period moving average. Let me make it red in color. Now, as I said that we can use moving average to determine the trend. Now, whenever the stock price is trading above 200 moving average, it is said to be an uptrend. And whenever it breaks the 200 moving average, the stock is said to be in a downtrend. Now, this moving average also acts as your support and resistance. If you see here, the stock crossed this 200 moving average. It took a support again and again at this 200 moving average. Again, it took a support. Then the 200 moving average is broken. Once this moving average is broken, then whatever, see, support acts as your resistance and resistance becomes your support. So it took a resistance from 200 moving average, then again the resistance was broken, and see again here it broke the 200 moving average, the prices went up, and then we saw a pullback. It was not able to cross 200 moving average, and see it again took a support from 200 moving average. Now along whenever we see a moving average, we also need to focus on the slope, what kind of slope the moving average is making. See, if it's in an uptrend, then you will see the slope of moving average is also in an uptrend. And now when the see the slope is in a downtrend, so the stock is also in a downtrend, and the stock is trading below the 200 moving average, so we can say that stock is in a downtrend. So with the use of moving average, we can identify the trend, and these moving average can also act as your support and resistance. Now suppose if I apply another moving average, I make it as 50. Now see, whenever the small term moving average crosses the long term moving average, a buy signal is generated, as I told you. So whenever now this is also known as a golden cross. Whenever 50 moving average crosses the 200 moving average in an upward direction, it is set as a golden cross. And you can see the rally in the stock. Then again the stock prices, they came down, took a support on 200 moving average, then again it crossed the 50 moving average, and then again a buy signal was generated. And whenever a short term moving average crosses below the long term moving average, a sell signal is generated, and this is known as your death cross. See here, 50 moving average crossed 200 moving average, and we can see a rally in the stock. And here the prices, we saw a pullback in the prices, a double top was formed, then again see 50 moving average crossed 200 moving average, and you can see a rally in the stock. And see, this 50 moving average also acts as your support. Stock is again and again taking a support on your 50 moving average, and when it broke 50 moving average, it went down and took a support from 200 moving average. See, at this point also stock took a support on 50 moving average, and see the slope of 50 moving average as well in an upward direction, and the stock is making high. Now see, sometimes the moving average, one moving average also takes a support on another moving average. If you see this area, the 50 moving average, it did not break the 200 moving average, rather it is taking a support on 50 moving average. So it becomes a very strong support for the stock as well. Now see here also your 50 moving average is taking a support on 200 moving average, and see the curve this 50 moving average is making, and see the rally in the stock from there. And every time we see a pullback in the stock takes a support from 50 moving average, and we can see a bounce in the stock. See here again, it took a support from 200 moving average, and see at this point the kind of curve that this 50 moving average is making, almost trying to take a support from 200 moving average, and see the prices, how they moved, how beautifully the prices moved in the stock. So 250 are the most widely used moving averages. Now let's see the another indicator. My broadcast is getting delayed. All are facing the same problem. Screen is not visible. Screen no movement. Okay, just a second, guys. Yeah, hello guys, can you hear me? Okay, so see, I'll just log out and then log in again. Okay, then let's see if it works or not. Okay, so I'll repeat the entire thing once again, not to worry. See, what I was telling you is that moving average is the most widely used indicator in technical analysis. Now, it is a trend following indicator, but it is also a lagging indicator because it is based on past price. The two most commonly used moving averages are the simple moving averages, that is the SMA, and the exponential moving averages, which is EMA. Now, simple moving average means that I take the closing price of the last 10 days and divide it by 10, then I'll get a simple moving average of 10 days. In simple moving average, more weightage is given to the past price, whereas in exponential moving average, more weightage is given to the recent price. Now, with the use of moving averages, we can identify the trend, the direction of the trend, and we can also determine the support and the resistance level. Now, these moving averages, they also give us the buy and the sell signal, in a way that when a short term moving average crosses over the big term long term moving average, it gives us a buy signal, and when a short term moving average crosses below the long term moving average, it generates a sell signal. Now, as I was telling that 50 and 200 period moving averages are the most widely used moving averages. Now, along with this, people use different moving averages. Let's say for a shorter period, some may use 10 moving average, some may use 20 moving average, and along with 50 and 200, some may also use 100 period moving average. So now we were looking at 200 and 50 period moving average on the chart, and I was showing you how we can identify the trend and how these moving averages act as a support or a resistance. Now this is a chart of Reliance. Now sometimes, as I was telling you, that moving averages also take support on a one moving average can take a support on a longer period moving average. Like here, if you see, the 50 period moving average is taking a support on 200 period moving average. It did not break the 200 period moving average in the downward direction, and when it started moving up after taking a support, then you can see a rally in the stock. This 50 period moving average also acts as a support. See, every time there is a pullback, you can see the stock bounces from this 50 moving average. So 50 period moving average and 200 period moving average are the most widely used because they act as a good support and resistance. They show us the good support and resistance areas, and we can identify the trend. Now see, every time stock is taking support on 50 period moving average, and here it took a support on 200 period moving average, and when it crossed the 50 period moving average, we can see a rally in the stock. Now see here the type of curve this 250 period moving average is making, and you can see once the prices cross this level, you can see the rally in the stock. From around 1138 it went up till it made a high of 1321. So when you are looking at moving average, you also have to focus on the slope of the moving average. See, if the market is in uptrend, the slope will be in the upward direction. And now if a stock is trading above 200 moving average, which means that stock is in an uptrend. And if it breaks the 200 period moving average and is trading below a 200 period moving average, then we can see that the stock is in a downtrend. Now when stock is in a downtrend, let's see some example where stock is in a downtrend. See, we saw how the stock was taking a support on 50 period moving average. Now here you can see the stock is in a downtrend, and see the slope also of the 50 period moving average and 200 period moving average. And now here you can see that every time the price we goes near 50 period moving average, we see a pullback. The prices are taking a resistance from 50 period moving average. Let's see any other stock. See Ajanta Pharma. It broke the 200 period moving average, and see 50 period moving average also crossed below 200 period moving average. Now this is known as a death cross. Every time stock goes near 50 period moving average, we see a pullback. Even here it is taking a resistance from 50 period moving average. Now it crossed this 50 period moving average, it went up, it was not able to sustain about 200 period moving average, then again we can see a fall in the stock. Now here see the price is again taking a resistance from 50 period moving average. So here it took a resistance from 200 period moving average. So if a stock is in a downtrend, then it takes a resistance from 50 period moving average and 200 period moving average. So every time we see a pullback in the stock, as the stock reaches near the 50 period or the 200 period moving average, and if we see a reversal sign from there, we see any such candle formation which gives us a reversal sign, then we can short from that level. And see, when the 50 period moving average crossed 200 period moving average, that was the time we saw a rally in the stock. Now this is known as the golden cross, when 50 period moving average crosses 200 period moving average. Now the next indicator is RSI, or the relative strength index. Now RSI is a momentum indicator, uh, which tells us about the overbought and the oversold conditions. Now RSI is basically, it works as an oscillator because it oscillates between two extreme points. When the value of RSI is above 70, it indicates that the stock is in overbought zone, and we can see a reversal or a pullback in the price. And if RSI is below 30, then that indicates that the stock is oversold. Now let's apply RSI to our chart. See, let's see the settings of RSI. See, the upper band is 70 and the lower band is 30. So you see, whenever RSI is trading below 30, it is known that we can assume that the stock is oversold, and we can see a reversal in the stock soon. And when it crosses this 30 period in an upward direction, that is the time we can see some rally in the stock. And when it crosses above 70, that is the time when we can say that the stock is in overbought zone, and we can again see a reversal in the stock from there. Basically, this is a momentum indicator. It moves along with the price. If the price is moving higher, then then RSI will also move in the direction of the price. And if a price is moving in the downward direction, the RSI will also move in the downward direction. But whenever we see that now RSI is below 30 and now it is about to cross 30, that is the time we can say that above 30 we can say that now the river we can see some movement in the stock in the upward direction. So when RSI crossed 30, you can see the candle, there was movement in the stock. From 979 stock went up till 1020. But we also use RSI to look for a divergence, the negative divergence and positive divergence. That is the bullish divergence or the bearish divergence. Say if I apply Reliance Industry. Now, in order to see divergence, what you have to do is change your chart to line chart. Now, negative divergence means that, as I told you, that RSI is an oscillator. It moves along with the price. If the price is making higher highs, RSI will also make a higher high. But if the price is making lower low, then RSI will also make a lower low. Now, if you see from this point, if you see here, we can see this is the low and this is the lower low. But if you notice the RSI, if you look at the RSI, at this point and you compare it with this low, then RSI is making a higher low. Whereas if it is moving along with the price, then it should also make a lower low. See, prices are making lower lows, but RSI is making a higher low. Now this is a bullish divergence. This gives us an indication now that the trend in which the stock is, the trend, either the trend will stop, the stock will go in consolidation, and we can see a reversal soon in the stock. Now you can see our Reliance was in the downward trend, and when we saw this bullish divergence, after that you can see the rally in the stock. Now similarly, if you notice this high, and if you look at the RSI, and if you compare it with this high, now RSI is making a higher high. But if you look at the number of RSI, here the RSI was around 75, and here RSI is around 74.8. So there is a slight divergence in RSI at this point. So this is your negative divergence or your bearish divergence. And once you get the divergence, then you can see that prices are falling. So RSI also gives us an indication as to what is when the trend is about to reverse. Now see here, Nifty, RSI. Nifty is making lower low. But if you look at RSI, RSI is making a higher low. So this is a bullish divergence. And we can see rally in Nifty. And also if you notice this pattern, this is your one shoulder, this is your peak, this is your another smaller shoulder, head and shoulder kind of a pattern. And you can see once it broke the neckline, then you can see this Nifty went up. So basically there are two divergences that we are looking at. One is a bullish divergence and one is a negative divergence. Now, where will you see a negative divergence? When a stock is in an uptrend, that is the time we will look for a negative divergence. So that will give us an indication now that the trend is about to reverse. And when a stock is in a downtrend, that is the time we will look for a bullish divergence, which will give us an indication now that the trend is about to reverse and we can see a bullish trend. So whenever you want to look for divergence, please change your chart to line charts, and then you can look for your negative divergence and bullish divergence. Now another indicator that is most commonly used is MACD, or the moving average convergence divergence as it is known as. Now this is also a trend following momentum indicator, And this is basically, it shows the relationship between two moving averages. Say if I plot MACD also on the chart. Mm, Indicators, MACD. Now this also works exactly the moving average crossover. We have one 12 period moving average and another is the 26 period exponential moving average. And whenever this crossover takes place, when the 12 period moving average gives a crosses this 26 period moving average in the downward direction, you can see the stock prices are also falling. And whenever this crossover takes place, we can see a rally in the stock. Now MACD is calculated by subtracting 26 period exponential moving average from 12 period exponential moving average. Now the signal line in this MACD is your 9 period exponential moving average. The zero line that you are seeing is a 9 period exponential moving average, and this is a histogram. If MACD is above the signal line, that is above the zero line, the histogram will also be above the base, above this line. And if MACD is below the zero line, then your histogram will also be below the zero line. And when MACD crosses above its uh, signal line, that is the 9 period EMA line, that is a buy signal for us. And then it is below the this 9 period signal line, that is a sell signal for us. Again, is there again an issue with the video? Anil is saying no. Vijay is also saying no. Can you see my mouse moving or the chart moving? Anil can see it. So maybe Imtiaz, this time there is a problem for from your side. Maybe you can just log out and log in again. It's delayed. So you want me to log out and log in again? Fine, then I'll just log out again and again log in. Okay. So MACD, that is moving average convergence divergence, as I said, is a trend following momentum indicator. Now it is basically nothing but see there are two moving averages that is used in MACD. One is a 12 period exponential moving average and the other one is a 26 period exponential moving average. And this line, the line in the middle is known as your signal line. Whenever this blue line, that is your 12 period moving average, crosses the 26 period moving average in an upward direction, then you can see how the stock is also moving up. And whenever this 12 period moving average crosses the 26 period moving average in the downward direction, we can see some pullback in the stock. Now buy signal for us is when your MACD, that is your 12 period moving average and 26 period moving average, is above the signal line. If it is below the signal line, then that is a sell signal for us, and buy signal is when it is above the signal line. And this is the histogram. Now if your MACD is below the signal line, then your histogram will also be below the zero line. And when your MACD is moving in an upward direction, then your histogram will move above the zero line. So this also gives us a buy and a sell signal. Fine with it? Now let's see another indicator, stochastic. Now stochastic is also a momentum indicator. Now stochastic is basically an oscillator because this also oscillates between a range. Now this also gives us a overbought and an oversold signal. Now what I'll do is I'll remove MACD and I'll apply stochastic. The stochastic moves between 0 and 100, but above 80 it is considered to be overbought, and below 20 it is considered to be oversold. Now here also we have two lines. One is the blue line and another one is the red line. Now whenever we see that stochastic is now moving above your 20 period, that is the time we can enter in the stock, like say over here. And when the blue line crosses the red line, then you can see a rally in the stock. And when we see a reversal, when the blue line crosses the red line in the downward direction, and when the level of 80 is broken, that is the time we can go short in the stock. So above 80 is considered to be an overbought zone, but the stock can remain in an overbought zone for a long time if the trend is very strong. Similarly, if the trend is weak, then stock can remain below your 20 period for a long time. So we will enter when it is crossing your 20 period. And when the blue line crosses the red line, that is the time we can enter in the stock. And we'll exit when the blue line crosses the red line and it breaks below the 80 level. That is the time we can exit our positions or we can take a short trade. So this is basically an oscillator, and it oscillates between these two numbers, between 20 and 80. Now these are the basic indicators that are most commonly or most widely used for technical analysis. Now the setup that we will be using for our technical analysis is, one, we'll be using 200 period moving average and 50 period moving average, and another moving average that we'll be using will be of 10 period. Change the color to green. Now this is a short-term period moving average, and if you notice that prices always move along this moving average, and when prices comes below the moving average, that is a time, that is a signal for us that we can either exit our position or we can go short in the trade. See, whenever, see here, you can see that 10 period moving average crossed 50 period moving average, and see 50 period moving average is also making a curve in the upward direction. And say if we entered our trade at this point, when the 10 period moving average crossed the 50 period moving average in an upward direction, that is around 11:30, because there was this small resistance for the stock, as the stock was retracing from the same level again and again. So once we get a breakout from this level and 10 period moving average crosses the 50 period moving average, we can see a rally in the stock. And along with these three moving averages, another indicator we are going to use RSI, but we will change the settings of RSI. Instead of 70 and 30, we will be using 60 and 40. Because you see, whenever the RSI crosses above 60 and move in the upward direction, we can see a good rally, a quick movement in the stock in the upward direction. And whenever it breaks the 40 level, we can see a quick fall in the stock. If it is between 60 and 40, then you can see over here that stock, the movement in stock is very slow. Either the stock is in a sideways zone, or if even if it's falling, then there is not much of a fall in the stock. We see a quick movement in the stock once it crosses the 60 level in an upward direction, or it breaks the 40 level in the downward direction. So we'll be using 60 and 40 as a setting for RSI. And we can also use MACD for our analysis. Okay, got it? Got the setup? Any questions till now? What we have seen or what we have discussed, if there's anything that you want to ask, please ask. See, till now we have seen the candlestick patterns, we have seen the chart patterns, we have seen the indicators, and today we also saw the setup that we'll be using. Now, tomorrow we will look at the trading setup. What kind of trading setup we can expect in the market, and where we will look for a buy or a short position in the market, because we can't enter at any random place or at any random price. Where can we look for a long opportunity in the market, and from where can we look for a shorting opportunity in the market? Any questions, anybody? Looks like you guys understood everything and you have no questions to ask. Anything about the candlestick pattern, chart pattern, anything about support or resistance, anything about indicators? If you guys have no problem till up to what we have covered till now, then we will end our session today. We'll conclude today, and then tomorrow we'll see the trading setups. And tomorrow we can analyze some stocks as well based on our setup and what time frames to use for analysis. Fine, then I think we'll conclude for today. See you guys tomorrow. Anil, you asking me question on Telegram, not on the Q&A box. Yes, tomorrow we have a session on Saturday. Why you guys have any problem? Yes, tomorrow is Saturday, but we can have one session tomorrow, Anil. Okay, you got an email on that timetable. We don't have a session on Saturday. No, no, we will have a session tomorrow. If you want, we can take a Sunday off. So tomorrow we'll see the trading setups and we'll try and analyze some stocks. Yes, MACD is more useful for positional, but in MACD signals are a bit slower, a bit lagging than RSI. RSI is much faster than MACD. We would have a session to set up dashboard, right? I didn't get your question, Anil. Set up dashboard means what? Stochastic, you didn't understand Imtiaz. So I'll repeat stochastic for you once again. EMA and MA. See, SMA is a simple moving average, Anil, and EMA is exponential moving average. And what we are using in our setup is a simple moving average. We'll be using simple moving average in our setup. Now, stochastic Imtiaz is an oscillator indicator. It oscillates between a range. Say when it is about 80, it is considered to be in an overbought zone, and when it is below 20, it is considered to be in an oversold zone. Now suppose if I apply stochastic, now see this is your stochastic. Above 80 is overbought, below 20 is oversold. Now in this also you have two lines. One is a blue line and the other one is a red line. Now when we see that now stochastic is moving above 20 and the blue line has crossed the red line, that is the time we can enter in a trade. And you can see the movement in the stock also. When it crossed the 20 line and it started moving above towards the 80, you can see the movement in the stock. Now once in an overbought zone, if the trend of a stock is strong, then it can remain in an overbought zone for a longer period. See, it crossed 80 at this level, and see the trend of the stock was strong, so it was in an overbought zone for a long period of time. And when we see that the blue line has crossed the red line, and when it breaks or it crosses the 80 level, that is the time. If you are holding a long position, we can exit from our position, or if you want to short, then you can create a short position in the market. So RSI and stochastic basically both are a momentum oscillator indicator. RSI above 70 is also considered to be overbought and below 30 is oversold. Same is with stochastic. Above 80 is overbought and below 20 is oversold. Now oscillator, we all know what is an oscillator. It oscillates from one range to the another, from one point to another point. So this indicator will always oscillate from one point to the another point, from low to high. Now if it has gone to high, then it is bound to come to low. Got it, Imtiaz? And I have told you the settings that we'll be using for us for our setup. We'll be using 10, 50 and 200 period moving average, and we'll be using RSI, and we have customized the setting of RSI from 70, 30 to 60, 40. Yes, Imtiaz, the video will be uploaded in the website as soon as possible. Now, anything else that you guys want me to repeat, not only from today's session, from any of the sessions that we have covered so far, say anything from the candlestick patterns, anything from indicators, anything from chart patterns, anything from support and resistance? So if you guys have no further questions, then we will end this session today, and tomorrow we will meet again at the same time. Okay, bye then. See you tomorrow.